Palantir is priced to perfection, at least when we are looking at estimations that analysts are operating on. However, I think they are blatantly wrong. Here's why. Hey value investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Let's get into it. This is the problem. Although in my opinion it isn't really a problem. This is exactly why Palantir is such a good opportunity right now, but more on that later. For now, the problem is Palantir is underpromising consistently, and Palantir will continue to underpromise consistently. So why is that? Well, in this book, 0 to 1, Peter Thiel describes this in pretty fine detail. At Facebook, his other pretty well-known venture, they consistently underpromised and then over-delivered. And that is of course the easiest way to keep shareholders happy. If you make sure the bar seems to be high upfront, but it's actually quite easy to attain for your company, then you will almost always beat estimations. And beating earning estimations is what all investors love to see. Palantir is penciling out that their revenue will grow 30% plus per year until 2026. After which they haven't really released their projections just yet. And this growth rate is exactly what is projected in the current share price. So analysts are operating from the assumption that revenue will increase with 30% until 2026 and 25% after that. And assuming these high but not extraordinary growth rates, a P ratio of 40 seems fair. After all, Palantir is a tech company, but they are mainly focused on B2B or business to business. Therefore, analysts are operating on a huge P ratio of 40, which seems kind of low for a high growth tech company. So Palantir will do roughly $1.6 billion in revenue in 2021, and they will grow it at 30% until 2026, after which the growth will slow down to 25%, which will result in a revenue in 2031 of $18 billion. And then we slap on a net income margin of 35%. Why is that? Well, Facebook, the most similar mature tech company, has a net income margin of 35%, of course. And because of their similarities, anyone looking at the future of Palantir is also looking at Facebook today. So that margin of 35% results in a net income of $6.3 billion for the year 2031. And this, times the future P ratio of 40, results in a future market cap of $250 billion in 2031. Palantir currently has slightly less than 2 billion shares outstanding, and we are expecting a bit more dilution, perhaps 5% more. That will put them at 2.1 billion shares outstanding in the future. So we divide this market cap of $250 billion by the shares outstanding of 2.1 billion, and that results in a future share price of $121 per share. This would be a 5 to 6x return in 10 years, which certainly isn't bad at all. However, that also puts them at an intrinsic value of roughly $25 to $30 today. And that is exactly where the stock price has been trading the last couple of months. Also, we value investors never pay intrinsic value. So if I am so bullish on Palantir, this can't be right? Here's why I think analysts are blatantly wrong. Like I said earlier, Facebook, at whom Peter Thiel also has a pretty big influence, has a long history of underpromising. And because of that underpromising, they also have a long history of over-delivering on their promises with a huge margin. Like I stated earlier, co-founder Peter Thiel made sure to bake that right into the culture of Palantir too. I'll keep my projections and the analyst projections very similar, but there's one very distinct change between their projections and mine: growth rates. I think it is very likely that Palantir will grow at way higher numbers than they are penciling out today. One, since they already growing their revenue at 50% year over year. Two, because they have truly dominant products that contain huge competitive advantages. So if we look at my projections, we can see that I'm projecting 45% growth until 2026, after which they will slow down to 35% growth until 2031. Of course, they can and will go higher and lower depending on the year. This is just a framework. But in the long run, I think Palantir will follow a very similar trajectory. And these growth rates make them able to go from $1.6 billion in revenue in 2021 all the way up to $46 billion in revenue in 2031. If we slap on the same net income margin of 35%, again which we copied from the most similar mature software company, Facebook, then we get to a net income of $16 billion in the year 2031. And if we use the same future P ratio and the same future shares outstanding, we get to a future stock price of $300 in the year 2031. And in my opinion, that's pretty damn good. A 10x plus return in 10 years is certainly something I would sign up for. And of course, that expresses an intrinsic value would be roughly $75 today. So assuming these projections and assuming zero risk, Palantir should be trading close to $75 today. This is almost triple what analysts are projecting. And if we slap on a margin of safety of 50% on the $75, which I always do, I do not buy stocks with less than 50% margin of safety. After all, the margin of safety is what ensures that you and I get our tendies. Well, that 50% gets us to my buy target of roughly $40 per share. Let's summarize this video real quick. Analysts are currently calculating Palantir's stock price according to Palantir's own projections. And there's nothing wrong with that necessarily, but I think Palantir will way overperform their own projections. Like I said, Peter Thiel will make sure they do. If we assume analyst projections, $30 per share seems to be around intrinsic value for this company. If we assume my projections, Palantir should be trading a lot closer to the $75 per share. However, that discrepancy between analyst projections and my projections is exactly the reason why we have such a good opportunity to buy cheap Palantir shares today. And then in 3, 4 or even 10 years, when Palantir finally proves to the world how dominant they are and how amazing they are at generating net incomes, well, by then Palantir shareholders will be well rewarded for their troubles. And I think that's about it. If you enjoy content similar to this, please consider subscribing to the YouTube channel. I often do deep analysis on companies based on their fundamentals, and I preach a value and growth investor mindset. Also, I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next one. Peace.